Hi, thanks very much for coming to us here in Cape Town. We're just about 5 minutes away from the Finance Minister, Enoch Godongwana, delivering his midterm budget policy statement. We've seen a number of dignitaries in lovely German BMW and Audi vehicles pitch up here at the City Hall, entering into the venue, readying themselves for the delivery of that speech. As we've been discussing throughout the morning, a number of issues are going to be coming up. Primarily, the purpose of the midterm budget policy statement is for the Finance Minister to tell us what government plans to do in terms of expenditure over the medium term, that is the next 3 years, and also as well what their expectations are around revenue intake in those years. They've done quite well with revenue intake over the past year because of very good commodity prices. They've managed to get really good corporate income taxes from the mining houses. But of course, we're in a context where the global economy looks as though it may be taking a downturn. We've had a situation where there's been globally higher inflation, and that has resulted in central banks around the world, including our own, having to raise interest rates. And now, of course, the risk that these guys take in instituting this policy is that they might drive interest rates far too hard and end up hurting economies. And there's a worry that there may be a global recession. That doesn't mean everyone will be experiencing recession, but key markets may experience a recession, which would impact on countries like South Africa, which is a small, open economy that relies heavily on international trade. And of course, we've been doing very well in the mining sector with those booming mining prices, commodity prices on the back of the Russia-Ukraine war. So there's a concern, even with China, with all the lockdowns it's been having and the kind of consequences that will have on its economic growth potential. There's a worry that they may not be buying our minerals in the way that they have in the past. And that slowdown will impact us directly. So with that in mind, there's a fear that those good revenue intakes that the government has been experiencing may be short-lived. And so with that buffer that they have, they'll do well to be very careful in terms of how they allocate it and where they spend it. South Africa does have quite a high debt burden, something in the order of over 4.5 trillion rand. And of course, the ratings agencies, markets are going to be watching this very closely to see how Finance Minister Enoch Godongwana manages to walk that tightrope between appeasing those who are calling for things like greater social grants, more support for the likes of SMEs and other sectors of the economy that need some sort of capital injection to help them grow, and so on and so forth. Of course, our energy crisis is something that we keep on talking about. Lights out most of the time with high stages of load shedding, which is a terrible impediment for economic growth. And unless that, of course, is addressed, everything else falls by the wayside. So these are some of the issues that are going to be discussed. One issue that I haven't mentioned is that some months ago, the Transport Minister, Fikile Mbalula, mentioned that indeed there's going to be a positive, very sort of certain announcement made around e-tolls in Gauteng. We know that that particular initiative has not taken off. People have not been compliant and paying for the e-tolls, and the Gauteng government as well has not really been supportive of e-tolls. So we'll have to listen out for that particular issue as to whether they're going to get rid of e-tolls. And of course, they're going to have to tell us how they're going to fund those roads. So there's a lot of pressure on the fiscus to be able to provide left, right and centre. And it's going to be a real balancing act for the Finance Minister. And of course, the public sector wage agreement, that's still very much in the issue. It's very much topical at the moment. We know a number of teachers' unions have accepted the 3% increase that government has offered, but a number of others have not. The health union, Nahawu, the likes of the police union, Pop Crew, they're not prepared to accept it. But it does seem as though Tula Singesi, the acting public service and Administration Minister has advised National Treasury that they should put through this 3% increase. They must pencil it in the midterm budget so as to give the market certainty. But of course, everyone can see the reality that it may be penciled in, but it looks as though public sector workers may be on strike, some of them as early as next week. And so therefore that will be, of course, very negative, because if we don't have public services, that's obviously going to be very detrimental for people who need to do business and enjoy government services. We already know that there are massive problems with municipal delivery of services anyway, which does inhibit people from being able to go about their basic business. And of course, we've got the pressures like, the electricity outages and the water constraints, which are not conducive to a proper conducive business environment. So there are a lot of challenges that we have. Government will have to tell us, the finance minister will have to tell us about the initiatives that government is trying to spearhead in order to ensure that we get better economic growth. But the energy crisis is really front and center. We know a number of initiatives have been announced. We know that a number of IPPs were recently signed up to deliver energy. But when they sign on the dotted line, it still takes anything between 18 to 24 months before we see power. So in the short term, things are looking a little bit grey, especially in the context of the global backdrop, which doesn't look great. And as the situation in Russia and the Ukraine seems to intensify even more. And for the first time this year, in many a year, we're now talking about the possibility of a nuclear war, which is, very disturbing indeed. And of course, that could turn at any minute. But in terms of the local economy and the local issues, the finance minister will have to give some sort of reassurance that government is coming to the party. The difficulty, of course, that the finance minister and the ANC government is in right now, we're heading towards the elective conference in December. And then on top of that, come 2024, we have the general elections. It's always tempting for politicians to make shortcuts in order to seemingly appease the electorate, give them what they want, but that could be costly for the economy in the long run. So these are some of the challenges that we face, and it's going to be interesting, of course, for us to see how these issues are going to be addressed. People are fed up. They just feel that they keep on being speeches and talks, but nothing is really felt on the ground. Earlier, I spoke to a gentleman who works with SMEs, and he was talking about how the so-called improvement in red tape that was announced by the president at the SONA address earlier this year, that just doesn't seem to have really dramatically changed people's reality on the ground. Red tape remains a reality just to get a business going. And when you do get a business going, there are all the challenges of lack of municipal delivery, lack of water, lack of electricity, etc., etc. And then curveballs that come into the economy, like unrest and floods and all that kind of thing. So, and then of course, when those things happen, the support that needs to come is not always forthcoming, even though, of course, a battalion of politicians will come to a disaster area and make all sorts of promises. But when they have left the scene, months later, we learn that, in fact, the situation of those people has not improved. So now we're going to cross over to Parliament and hear from the Finance Minister on his second midterm budget policy statement.